Hello, this is Steve Malone with Compass FX. Hope you're doing well today and you getting some good trades. Let's talk about trading an overextended market. I'm often asked, how do you know when the market is overextended? Some would call that overbought, oversold. And how do you trade it? Well, first and foremost, a price overextension or a market overextension is evident of an extreme, strong, sustained buying or selling in the marketplace. And you get this imbalance of supply and demand in the marketplace. The buyers who are putting in bids compared to the sellers putting in offers in the marketplace. And there's an imbalance between the demand, those wanting to buy, compared to the supply, those wanting to sell. And today we saw a strong imbalance in some of the pound pairs. I'm going to take a look at the pound yen specifically. I want to walk you through trading an overextended market. Now at first, the market wasn't overextended, but as the market progressed further and further, it did become overextended, or some would say in this case, oversold. So if we look at this, we can see that the market had pushed down. I want to just simply walk you through looking at the DOTS levels. Now, I've heard from some folks, and some folks saying, I don't know if DOTS is really a fit for me. Well, I got to ask you, if you're sitting there trading and you have these levels, and these levels have been identified at the open of the session, and the market may not get to those levels for another 30 minutes, another 2 hours, another 3 hours, whenever it might get, wouldn't that be helpful to know a potential target algorithmically calculated as to where the market could potentially go? Furthermore, should the market hit that level, we should expect the market to do some sort of reaction. Again, DOTS is simply taking a historical perspective of price, comparing to market conditions, and then considering if the market is expanding or contracting, and laying out levels for you at the open of a session. So we can see in this case at the Tokyo Open, the market, which was pretty much near the high of the day there, made a push down, and there was a nice trade there for 70 pips in the pound yen, and it dropped right down, and notice how it just sat there at the 188.25 area. It did a little bouncing back and forth here between the sell target number 1 and sell target number 2 level. But look at that. Now I'm hard pressed when people tell me, I don't know if DOTS is going to work for me. Well, okay, but anyway, let's take a look at what happens now, because the market did push down. It had not reached its average daily range of 187 pips yet. So we go take a look at the European session. Just moving the DOTS levels over a bit, you can see that through the Tokyo session into midnight New York, finally come European session, look what the market does again. The market comes down. It did pin below the sell target number 2, but notice how it closed and settled right near that sell target number 2 level. Look at that, 67 pips from the European Open. And within, let me see on this 30-minute chart here, within an hour and a half, you're hitting that level. When the market gets overbought or oversold or overextended, like in this situation, I have a tendency, once the sell target number 2 or the buy target number 2 is hit, then I'm going to move my DOTS levels to that next session. Here we have the European session. So we're going to move to the London session and look for the next set of levels. And notice what the market does. At the start of the London session, the market actually pinned up to the open of the session, then rolled back over, and guess what it does again? Settles at the sell target number 2 level. Again, I'm hard pressed when people tell me, I don't know if DOTS is going to work for me. Are you kidding me? 3 times now, it's given you levels as to where the market could potentially go to, and the market goes to those levels. We are now at the point where we're going beyond the average daily range. Now we're getting into that point where the market could continue to push, yet is pushing into an overextended and oversold situation here. Moving to the New York session, we can see that the market again pushed down lower. As a matter of fact, pushed well below the sell target number 2, basically made an additional move this distance here. So from the sell entry down, we had a move of about an additional 120 pips to the downside. So let's go back for a moment and consider about trading the overextended market. Because if you look back here, you could probably think, well, this is probably it for the day. I don't think it's going to go much further, we'll probably see it kind of bounce back up in New York. And oftentimes that's what we get. We get that some traders would call the New York bounce. We'll get a push back. Well, not in this case. The market continued. So as U.S. traders were coming in today, they're like, hey, I want some of that action. So they jump in and it gets traded down lower. So a couple of things I want to point out here. Many traders often, when they see the fact that the market seems to be overextended and doesn't look like it's going to continue going, many of them will get in on a move like this and look to fade the market. Fading the market's basically you're buying or selling back into the market. So in this case, traders are buying back in and some are looking for a push back towards the middle of the market. And that's not what happens. The market comes back over. So here's my thought about that. Avoid getting tempted to fade the market and look to enter into the prevailing trend. And that's where the long-term guppies are coming in at. So what I look for, and what we often talk about in the Dot's trade room, is look for these pullbacks. Look for the market to come back into the short-term guppies, possibly even coming back as far as to test the long-term guppies, and then we look to trade back in the direction of the long-term guppies. So avoid fading a strong trend. Instead, look to enter into the market back in the direction of the long-term trend. So when you step into an overextended market, my recommendation is to reduce your size. We don't know exactly when the market's going to bottom out, but in the case where in this area right here, when the market rolls back over, maybe it'll just come to this floor, and from the point of entry down to this area is about 30 pips there. You might want to lighten your load just to see if the market will possibly tap that low point and bounce right back up. If the market breaks that floor and continues, then you can add into your position. But again, be cognizant of your size of position. Why? Because the market has gone beyond a normal range. And that's really bottom line when it comes to an overextended market, is the fact that the market is trading beyond its normal range. Well, what is that? Well, if you're not familiar with a currency pair, get familiar with a currency pair. If a currency pair typically trades up and down within 80 to 100 pips, then you have a fair idea. If not, then consider the average daily range. We can see here that the average daily range is 187 pips. From the high of the day down to this low point right here, that's already 300 pips into the move. We're well overextended at this point. So consider your average daily range. Consider, if the market goes beyond the average daily range, consider your average weekly ranges. And be cognizant of any retracements or extensions on a higher time frame chart. For instance, this big move down we've had today, look at the pound yen on a daily chart. Look at this one strong move. The market moves all the way back to the 50% level from the low we had back in April to the high that we had in June here. We've seen a move, and today that one move takes down about 9 to 10 days here. 9 to 10 days are taken out in a one bar move. For those of you listening to me right now who have dots, use the dots levels. This is an algorithmic calculation letting you know by price and the cycle of price compared to historical price patterns and the market expanding or contracting, where the most likely place the price will move to. And it does just that, from level to level, from session to session. Last but not least, when it comes to an overextended market, I recommend that when we're getting to that point where we could be looking for a double bottom, in this case when the market's made a strong move down, this is the pound kiwi. Again, here's the pound kiwi. It had 218 pips here is the average daily range, and it moves today 564 pips. Just out of the ballpark. Way, way beyond. So there were some folks here this morning in my Dodge trade room. We were talking about, hey, this is a possible double bottom. Get ready to go long. And look what the market did. The market continued its push lower for 150 pips beyond that floor right there. So be cautious when you're looking to fade the market. In this case, the market pushed on down, came back up, tested, and then continued on down. So, long story short, In an overextended market, be aware that sometimes an overextended market is really just a really strong market in that direction. Avoid fading it. When it comes to a bottom, wait for the market to create a double bottom, maybe a triple bottom. Wait for a test of the bottom. If it pins low, like if this rolls over, hits the bottom here, pins low, and then bounces back up, then you know it might be time to see that retracement. And last but not least, I'm going to suggest use proper money management, reduce your leverage, maintain your discipline, follow the trend direction until it doesn't go anymore or until you're uncomfortable in stepping into that position. In this case, I think we could be done, but I would want to see this to roll back over, form a good floor, take a bounce, test the floor, and then start showing itself to move back up before stepping in and trading long. Same thing with the pound yen. Pound yen showing a possible move here. It's got a double bottom. It needs to break this little floor area, that top right there. It needs to break this floor high and then push on up. In that case, we could be looking for a potential long. Just be careful that it could come back over, retest if we have some additional weakness in the pound or additional strength in the yen. Well, this is Dean Malone with Compass FX talking about how to trade an overextended market. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.